Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 265 for June 1st, 2020. We are recording this at 1 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we will be discussing the S&P 500 and the 349th weekly Crowd Forecast News report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can get either the web or PDF version there. So today I have arranged for John Thomas, Neil Batho, and Jim, the option professor, to be here. And Jim will be moderating, so I'm going to go ahead and turn it over to him now.
Okay. Thanks, everybody, for being here today. And again, a big Monday morning. A lot of people thought there'd be a big sell-off. So far, that's not happened with all the rioting, et cetera. Today, we're going to have John Thomas with us, a hedge fund trader. And John, before we get started, a little introduction on yourself and a little bit about what your company's doing.
Yeah, I do all asset classes, long and short, stocks, bonds, commodities, precious metals, energy, and foreign exchange and real estate. Looking to buy the cheapest things in the world, sell short the most expensive things in the world. And as a result, we're almost always up. Our biggest drawdown in February, March was 12%. We're now back up to new all-time highs, up 27% off the bottom. You can find me at www.madhedgefundtrader.com, where you can sign up for my free research and trade alerts.
And you have an event coming up Thursday, maybe, John, that you're going to talk about at the end?
I have the Mad Hedge Traders and Investors Summit. We have 9 of the sharpest speakers in the industry, an accumulation of the best traders I have found over the last 50 years. And you can register for that for free also at madhedge.com.
Okay, and you can give more information also at the end to remind the listeners. Right now, we're looking at the S&P 500. John, do you want to expound on what you're seeing and what you think?
Well, we're fighting a real battle here at the 200-day moving average. And my thought was that there's 2 possibilities. We go straight up, or we have a false upside breakout, which I think we are getting, and then a further collapse once the market starts to focus on the 100 or so reasons why it should go down. Great Depression, worst economy in history. It's the free Fed put that's supporting the market here, and that won't last forever. We also have $5 trillion in cash on the sidelines that was flushed out at the market bottom on March 23rd. So epic tug of war on upside and downside influences, and for the last 2.5 months, the upside has been winning.
With regards to if we were to roll over, is there certain areas where you think it might be worthwhile to step back in?
If we can get back to 2,600 on the S&P 500, that's your first entry point. The second is 2,500, and your third is 2,400. Below 2,400, I'm certain the Fed will step in with another $8 trillion stimulus package and QE. So all alarm bells will be ringing at 2,400. And I pray we get there, because we had the buying opportunity of the century on March 23rd. I'd kind of like to get another buying opportunity of the century.
Yeah, it would be nice.
We've essentially taken profits on all of our longs and even running a few net shorts here.
With regards to different stocks that you're focused on, could we put some charts up on the ones that you're kind of have a strong opinion on, one way or the other?
Apple, you can put Apple up. It's been leading the FANGs to the upside. And essentially, all of the FANGs have identical charts. Huge double top risk here. I'm on the verge of putting on a short in Apple on the assumption that we go back and test is that the 50-day moving average you have there in purple?
It's 200.
200, yeah. Well, 200 would be a gift. And it'll be like 275 by the time we get down there. So
There's the 50.
the 50 is not really that far off. So yeah, 200 would be a gift, major support down there. And that's where I'd be covering all my shorts also. Everyone knows long-term, these things all double or triple. So any short side play is going to be a short-term one of a month or two. And you can put Google up there. Also, you can see it's failing at a top. And Facebook is also failing at a very high level, at an all-time high, essentially. All these things are running out of steam as the new cash rotates into the recovery stocks like hotels, airlines, builders, and so on.
With regards to each week on Monday, we generally ask the question, what do you think the S&P may do between now and Friday? I don't know if you have an opinion one way or the other.
I think we have to go down. I think the market's the most overbought since the year 2000 when the dot-com bubble peaked. So we're cutting our positions down generally. We've gone from 100% invested to 60% as part of a general de-risking, but we're also going neutral inside that balance, essentially 30% long, 30% short. Right. And I'm going to try and go to 100% cash in the next 2 weeks with the June option expiration. It's amazing how refreshing 100% cash position is. It lets you see things that are otherwise invisible.
It takes prejudice away, it gives you a more balanced, able to look at things.
Yeah, it also gives you a chance to just walk away. I mean, there's no law that says you have to trade every day of the year. You only want to trade when the risk reward is the highest. So give yourself that luxury.
Is there any other stocks you think that aren't extended that might have value down here?
No. Mm-hmm. I think everything is overextended. Even the airlines have had tremendous moves off the bottom. So I would rather just sit back, wait for the sell-off to happen, maybe play a few shorts, and wait for the market to tell me what's going to happen next. But there's no doubt that the big tech stocks are going to lead any long-term bull market in the future.
There's been a little bit of talk about value playing a catch-up game. What do you think about that?
I've been hearing what a great deal value has been for the last 11 years. And I've been paid to go take a nap instead. I kind of like napping, so I'll skip the value. The only people who can really do value stocks are these big value mutual funds who have 1, 3, or 5 year money locked up. If you don't have a lockup of some kind involved with value investing, you tend to lose all your money at market bottoms and get it all back at market tops.
What are you thinking of mid cap, small caps playing catch? Oh,
yeah. I think Neil's here now.
Oh,
Neil, are you there?
Yep, I'm here.
Hey, Neil, okay. Just a quick introduction of yourself and your company so people out there understand who they're listening to.
Sure. I used to be a broker at a big firm right out of college for about a year, and did some consulting for a while, and then I started my newsletter. So I've been doing that for a really long time now, and I use some of the techniques I learned when I was a broker, which is point and figure charting, which is a fantastic system I've used to call every single market top and get us out before every crash for 15 years. So including the last one. So we're up about 30% this year, depending on your position size, maybe up more. Everyone position sizes a bit differently. So I just send out a tight portfolio of stocks, ETFs, and options to my clients.
Okay, as far as the general question we have every Monday is what you're feeling on the S&P from today's opening till Friday's close. It's already up about 20 points from the opening. So what do you think?
Up.
You like it?
Yep. Yeah, you got to go with the charts. You can't be an armchair analyst. Is what it is. If the market's going up and you think it should be going down, you're probably wrong.
Well, the interesting thing is it had a jump above that 3,000 mark and came down and tested it twice, and it's held. So from people who want to be bullish, that would be a constructive thing, huh?
Well, one of the things people don't understand is that the market maker's only goal is to wipe you out and take out your stops. So anytime a trend starts, there's always going to be these little mini double bottom sell signals, and they do that on purpose. They can. You also have these algorithmic trading programs that can put in tons and tons of bids and pull them at the last second,
Right.
and it's completely legal because they'll say, "Oh, we thought we wanted to buy, but we changed our mind," you know. So they'll put in massive amount of bids right below the double bottom sell signal, and all these amateurs will get stopped out, and then they go, "Oh, the market's a scam." But once you realize what the scam is, you got to hold through these little sell signals. We actually got out on Thursday because it was looking a bit sketchy, and we held heavy metals. But now I'm probably just going to get back in.
Is there any stocks that you're kind of looking at, or commodities, or anything that we could put a chart up and you could discuss?
Yeah, I like silver. We've gotten into silver a couple of times and gotten some awesome moves. I also got into platinum a couple weeks ago. A lot of people think that platinum, or a lot of people forgot that platinum's supposed to be more valuable than gold, but it's only $900 an ounce right now. So that's a bit odd, but it's mostly, I think, because of the catalytic converters, I guess. It's one of those heavy metals that really does have industrial uses. I think 23% or so of the use of all platinum is in catalytic converters. So when the economy starts up again, obviously more cars, 3 months, no payments, that type of stuff. So.
Right. So you think the silver and the platinum looks like they could be going someplace, huh?
Yeah. I mean, the greatest trade of my whole life was a few months ago. Was silver at $12. I was just in complete shock when I saw it. When you had a $3 trillion stimulus package and then silver sold off 30%.
Right.
Something's going on. I don't know what JP Morgan did or who the heck knows, but I don't care. So that was our best trade. We made 42% in 2 days.
John, how do you feel about the metals? You have any opinion on the metals and any stocks you're looking at?
Well, I wouldn't touch platinum with a 10-foot pole right before catalytic converters are about to become the next buggy whip. There's a reason why the auto stocks have performed terribly, didn't really participate in this big rally, the biggest rally of all time, really. And that's because they're going out of business. In 20 years or maybe less, 100% of car production will be electric, and they don't use catalytic converters. And that is why platinum and palladium are not performing. All the buying of metals in the world until now has been central bank buying, and they prefer gold. So if you put GLD up there, you can see what I'm talking about. And of course, all the QE the government's creating makes the US dollar worthless and gold very valuable. And silver is improving because guess what electric cars use? They use silver. They use wiring. Put SLV up there. And the difference between the gold and the silver chart is the presence of central bank buying in gold, which doesn't exist in silver. Central banks don't buy silver, they buy gold. And I would imagine that if you did an overlay between Tesla and silver, it's almost a one-to-one relationship. So that is why silver was late to the party, but is now catching up, and that's because Tesla stock has done exactly the same thing.
So you're more favoring on the gold than
Yeah,
the
it's
silver,
almost an
basically.
exact chart, Tesla and silver.
Yeah. Yeah, there was a SILJ that I brought to people's attention in my weekly update. If you can put that up there, you get an idea in the last 2 weeks, it's up like 25% SILJ.
25 years ago, there was a one-to-one relationship between car stocks and platinum and palladium because they were great predictors of the economic cycle, but people don't see much of a future for the combustion engine, and that's why platinum and palladium have kind of fallen away.
There's a big electric car maker in China.
Yeah,
Was it-
BYD.
Yeah. What do you think of that company?
Well, I've been to the factory in China. I actually snuck in there once and joined a group of Japanese tourists. And
That's
got a
amazing, John. When was that?
that was about 10 years ago.
Yeah, what's the name of the
And-
factory?
What's that?
What's the name of the factory?
I can't remember where it is, but the company was
What
BYD.
city was it in?
What's that?
What city was it in?
It's in southern China, so it was easy transportation distance from Hong Kong. It's one of the reasons.
You don't remember the name of the city then, huh?
No.
That's
And this
bad.
was right after Warren Buffett bought 10% of the company.
Oh,
That's why I went there. And the trouble is, Chinese electric car makers have never been able to meet U.S. safety standards. Otherwise, they would have taken over our market a long time ago. And also, the demand in China is so overwhelming for electric cars that they have no need to export. And it's a good thing they didn't. Otherwise, they would have been caught up in all the trade wars. So at that time, they had a range of 100 miles per charge, and the government was installing free superchargers around the city, and they would run off of that.
The stock BYD, is the symbol BYDDF?
It is.
Yeah, because today it's up almost 6%. Looks like it's trying to go someplace, so it's kind of an interesting chart.
Well, what's Tesla doing today?
It's up hard, I think.
Let's see.
No, BYDDF. BYDDF. There's Tesla.
I
Yeah,
think it's
Tesla's
traded
up.
here on the pink sheets.
Yeah.
Tesla's up $47, so these are trading in line.
Yeah.
Tesla's taking.
wow,
out
that's
a
so weird
new
that
all-time
Tesla and
high, by the
Palladium
way.
Platinum are up the same day. Wow.
Yeah.
I thought that never happens.
Hey, Neil, have you been looking at anything else lately? You know, some people are looking at the price of sugar, maybe making a turn down here. Are you doing anything like that or no?
Who
Sugar's been
you
hanging
talking
around
to?
$10 for a long time, so
Yeah. So it's
no.
not.
But one of the bonds are really weak, so I'm just avoiding that.
Maybe, John, do you have an opinion? And Neil, you can both share the opinion on TLT, because obviously
that's our core position for the last 2 months, and we're running like a 40% short in the TLT right now, and we've done maybe 10 short bond trades in 2 months, and it has been a huge winner. And we think that one of the side aspects of massive government issuance, and I'm talking like 10, 15 trillion dollars worth of new bonds, is that it crashes the bond market. Even though they keep overnight rates at zero,
Right.
we think the bond market could drop 50 points from here. So our downside target on TLT is 105.
Wow.
It's actually the bond
selling-
vigilante that crashed the bond market, John.
Say that again?
They don't like stimulus packages, so the trading floors crash it on purpose to send a message.
Well, and it's if they are successful and they do stimulate the economy, interest rates will go up at the long end, and the Fed can control rates at the short end, but not at the long end. So you're about to see a very steepening yield curve between long-term and overnight rates. And who loves steepening yield curves? Bank stocks. And that's why bank stocks took off like a rocket last week. Put up JP Morgan. By the way, inflation is another aspect of $15 trillion worth of government stimulus. And you're already seeing it in food inflation. Food prices are up about 20% now.
I would agree with that.
JP Morgan Chase, that is just an enormous move, almost 30% off the May lows. And this is your Rolls Royce play on U.S. bank stocks, JP Morgan. You look at Bank of America, it's similar. And then Wells and Chase are the weaker players here.
Yeah. You have any opinion on the banks, Neil? Obviously, some people are concerned that the spreads are not there for them to make profits. Some people are thinking that the losses have not been fully accounted for. And then others think, obviously, it's clear sailing because of the Fed backing everything and the dereg that's gone on. What do you think? Neil? Hello, Neil? Okay, John, you with me?
Yeah.
Okay.
Yeah, it
About
looks
the
like we
bank.
lost him.
Yeah, I think we lost Neil. So I'm going to throw it over to John. John, as far as that tug of war between dereg and they're going to be able to make money in a lot of different ways versus they can't make money with the spread, and the loan losses have certainly not been discounted. You know, there's a tug of war there. How do you come down on it?
Well, if Jamie Dimon is right, and we do have a V-shaped recovery, these are the buy of the century. And you may get a V-shaped recovery for JP Morgan's clients, the Fortune 500. But I think a lot of people are sort of ignoring the impact of 15 million small businesses going out of business by the end of the year. And that is going to be a big drag on the economy, and especially employment. You may not get an unemployment rate below 10% for another 3 years. Mm-hmm. So you have to be careful, whose clients you're looking at when figuring out what the future of the economy is. But I've always loved JP Morgan, and it looks like we've kind of set up a range here at the bottom. I'd be buying like 50% off the recent tops, so that'd be around anywhere below $93. I'd be buying JPM, and I would be buying long-term leaps. Those are 2-year long option plays. Something like a 130, 140 leap 2 years out would generate a 500% profit on a 30% move in the stock.
Are you thinking more like 2022, something like that, January?
Yeah, I would go the longest maturity you can get.
You could find, right?
To allow for the unexpected along the way.
Right.
And boy, this has been the year of the unexpected. I feel like I'm reliving 1968 all over again, when the whole country was burning down last time. Just substitute out the Vietnam War for the coronavirus, and you have the stresses on the financial system are about the same.
Guy on Bloomberg was saying in 68, when they had all the unrest, it actually was an up year for stocks. And
the Dow average went up 4.3%
right
in 68, but that was inside of a sideways move that lasted 20 years. I mean, the Vietnam War was a horrible drag on any kind of investment.
Right.
Unless you were in the weapons business.
Right. Defense. With regards to other sectors that you're kind of looking at, consumer discretionary, while it had a bounce, certainly has a lot more ground to make up. What are you thinking about consumer discretionary?
Yeah, don't touch it. With the unemployment rate probably staying around 15% for years, you don't want to touch consumer discretionary. What you do want to touch is biotech. Mm-hmm. Look at Amgen. Any kind of dip in the biotech sector you want to pick up. This is a sector which was, sort of like a pariah 2 years ago. Drug pricing was all you heard about. And now they're having trillions of dollars rain down upon them to get corona cures. So, by the way, this is a potential double top here. And we're right back where you would want to buy into that. 50% drop in the recent gain. So
it looks like that 218 number is a pretty good number to trade against, huh?
Yeah, exactly. And there's your range, 218 to 245. Yeah. That's a very healthy range, knowing you're eventually going to break out to the upside. Our long-term forecast for Amgen is $400 a share. They have so many drugs in the pipeline. It's fabulous. And we actually published the Mad Hedge biotech and healthcare letter, and this has been one of our favorite stocks from the very beginning.
Your general theme is that if you're going to put money in the stock market, you want to put it into things that are going to move dramatically. And that's why, you know, if you're going to take risk in tech, take a risk in biotech and things that are going to, you know, give you a pretty good return if you're right, huh?
You know, we want to keep our longs in the long-term winners and keep our shorts in the long-term losers. So, you know, we've been long tech for 10 years. We're trading around it. We have a whole team of researchers in Silicon Valley looking for the next 10 bagger and 100 bagger. And that's how we were able to get into Tesla at $16 10 years ago. You know, we rode it from 16 up to 993. And we have several, you know, NVIDIA is another one of those we got into very early. Those are the ones that we're constantly following. And, you know, when you live here, you know, you go to a Boy Scout campfire, all the dads are working for tech. They're all talking about their business. You go to a cocktail party, everyone is working at tech. I happen to know that everyone at Salesforce, you can put up CRM, is working a double shift. You know, once the pandemic started, the entire world wanted to move their business online like yesterday. So stock is almost doubled here from the March bottom.
Well, what about Workday? That seemed to have been doing pretty good for a while, huh?
People, well, yeah, the trouble is with Workday, though, put the chart up. A lot of their customers are going bankrupt and defaulting on their leases.
Which what was the symbol on that one? Do you know?
WDAY. WDAY.
Yeah, this surprises me. So I wouldn't touch Workday here. I don't think there's going to be a surge in demand for office leases. If anything, all of commercial real estate is now under threat, and that's why I don't want to be involved in this sector. You know, the world now is about moving out of the cities to the suburbs, where you can't get sick.
What about Adobe? It's pressing all-time highs here today.
Yeah, Adobe, again, it's one of our favorite stocks. We also have a Mad Hedge technology letter. Adobe's been a core along there for the last 2 months, and we really knocked the cover off the ball on this one. But again, you know, watch out for that double top risk. If the market rolls over, even the best stocks are going to get hit.
You got any feeling on energy? Obviously, the prices have flipped back quite a bit, and it seems like they are trying to keep that production down. What are you thinking there? Is there more to come there?
Well, in January, I went on a world tour, and I said the price of oil is going to drop from $70 a barrel to 10 in 10 years. And people must think I'm an idiot because it went to negative 36 in 3 months. So up here, don't want to touch it. Still a big supply-demand gap on production worldwide, and it's still in the tens of millions of barrels. And another aspect of the epidemic is less transportation. People are flying less, they're driving less, they're commuting less, and you could have a permanent drop in global energy demand of at least 10 or 20% as a result of the pandemic. And that's not going to end with an economic recovery. Companies are relocating to people's homes permanently. Almost all the big companies in Silicon Valley have already done this. And that augurs poorly for any energy play.
Do you generally only stick with individual issues, or do you use ETFs?
Well, I use ETFs when I don't know which individual stock to buy, or I want to buy all of them. So take cybersecurity, you know, for example. You know, we think all of the 3 major companies there have an outstanding future because another pandemic effect has been that cyber fraud is up tenfold. So put up Palo Alto Networks, for example, PANW. That's been one of our big calls, and it's had just a massive move. 130 to 245. But if you want to get a broader play and you don't particularly want to buy Palo Alto Networks at an all-time high, you can buy the ETF, which is HACK, H-A-C-K, and that'll give you exposure to about 10 cybersecurity plays, and sometimes you can get participations in stocks that are not traded publicly or are traded overseas and are hard to buy if you're an individual investor here in the U.S. And
what about an ETF that would focus on the cloud?
The cloud is such a diverse play. If you want the purest play on the cloud, you buy Salesforce or you buy Microsoft. And I would say buy Amazon too, except the cloud is a much smaller part of their business. It's only about 10%, but that's still a $500 billion a year business.
Is there any ETF? Is there an ETF that's focusing on AI?
We do, and there's an ETF there. AI is really hard to buy specifically because it's always a small part of a large company's business. When you say AI, what's the first company that comes to name? Well, mine. It's IBM, because they have a huge advertising program on Watson. But Watson is less than 1% of their business, and they lose money on it. So there's another ETF there, the BOTZ, B-O-T-Z, or B-O-T-Z if you're from England. And that's an AI and artificial intelligence ETF, which we've been recommending, and we're about 75% up on this one.
Cisco's kind of been fairly quiet. Is there an opportunity to see some real jump in there?
Well, they should be. I actually kind of like Cisco. It's CSCO. And if you're moving a much bigger chunk of the economy onto the internet faster, Cisco is a huge beneficiary. Even though they're a legacy tech company, aren't really creating new technologies, they still benefit mightily from the vast migration online. And the stock is reflecting that. But again, don't want to buy it today. I mean, we've had a 50%, almost 50% run off the bottom, and we're approaching upside resistance here.
Yeah. Is Intel in the same boat, INTC?
Intel is exactly in the same boat. There's a INTC, you can put that up. Again, up 50% from the bottom. And there is a global computer shortage now. There's a global laptop shortage. Again, the growth rate of the internet has virtually doubled in a short time. And for Intel stuff, it takes them 2 years to build a new factory, and it costs $4 billion. So that creates a structural shortage of every kind of chip, from processors all the way down to DRAMs, and Intel is a big beneficiary here.
In the payment processors, somebody was saying Square is also a play on something besides payment processing. Is it a play on the cloud or anything like that?
Put Square up there. It's SQ. Square, we've been recommending this forever, but Square has a problem of their own, and that's they have a lot of exposure to small businesses,
right?
Who use Square to process their transactions. And while Square is a big beneficiary of touchless transactions, which are a result of the coronavirus, they will have a drag from 15 million small businesses going out of business, for sure. So I don't want to touch it here. Square was a great play earlier in the year, but not right here.
On the
Now, if
payment
you
pro
want
on
the
the pay on the pay,
purer
yeah.
touchless transaction play, go to PayPal, PYPL.
I was going to say, is PayPal a better play, you think?
There's no touching in PayPal unless you use their credit cards or their debit cards. Yeah,
Right.
look at that. That
Um,
almost is a double off the March bottom. So
Yeah.
this has been one of our big winners this year, and we expect new highs.
Another three that seem to be in the same, in the tech, obviously, jungle, Broadcom and Qualcomm.
Yeah, Qualcomm is a 5G play.
Right.
Anybody who wants a 5G phone has to buy Qualcomm's software, and they just finished a big patent infringement suit with Apple, which they won. So
Mhm.
The road is open there. Broadcom we like better for as a network play, and we're also recommending that.
What about the towers, American Tower and
We want
Crown
Crown
Castle?
Castle International, CCL.
Yeah.
Even with a pandemic, you need 7,000 new cell phone towers this year to accommodate the
CCI,
5G
I think it's
rollout.
CCI. Yeah.
Oh, sorry, CCI is right. Yeah,
Yeah.
Carnival Cruise. Yeah, you don't want to confuse Crown Castle International with Carnival Cruise Lines.
You'll find the price difference too.
That's for sure.
Mm.
Yeah, and this thing here has a big dividend. It's a 3% dividend, or at least it was. And we've been very bullish on this since January, when it had a 3.5% dividend. And now that the economy is pretending to come out of a depression, all of the 5G plays are back on stream, and Crown Castle is a big one.
someone in the live chat is asking about keys.
About what?
Keysight?
Yeah, this one.
They're on their way.
That one I don't know. I follow the big three. You know, we tend to have large hedge funds as customers, so we only look at large liquid stocks. My guess is this is probably a smaller play in the area, but you can't argue with that performance.
What about this service now? That seems to be one that's also been, I think it's going pretty good. Service now?
Yeah,
About
I don't
100
follow it.
Oh, okay. I thought you might be in your alley a little bit. It's just, there it is right there. Yeah, there you go. Yeah.
I think that's the kind of service any day.
Yeah. So they've been doing good. And the biggest one that people seem to trade on volume anyway is AMD. Do you think there's a
AMD
pullback to
is
be had there?
It's one of the monopoly of three
Mhm.
that we've been so bullish on. Again, this is the structural global shortage of chips play, and there's three of them. There's NVIDIA, there's Micron Technology, and Advanced Micro Devices. And we like all three. These all double on a 3-year view. So if you want to just put all your pension fund into 3 stocks and go to sleep for 5 years, or until you get up to your retirement age of 70, these would be the 3. Just expect some volatility along the way, because these are highly volatile stocks. I mean, 2750 to 5750. Don't expect to sleep every night with a position like that.
Only if you're not looking, right?
Yeah.
With regards to the mega caps, you already mentioned Microsoft. I mean, is Microsoft a $260 stock next year? And so anything in this 180, 190 areas,
Well,
kind of a
our
bargain?
target at the beginning of the year was 200.
Right.
So, we've been buying Microsoft every month for years, but again, same chart as all the big techs. Potential double top risk here. Just did a near double. So again, another reason why I'm so negative in the market. If you lose the leaders,
Yeah.
the catch-up stocks are a tiny percentage of the big guys in terms of market cap, and aren't going to be able to lead the market the way the big stocks did.
Now, what do you think of this theory that I'm hearing that the large mega cap tech and the ones we're mentioning are going to go basically static, which means in a trading range?
Well, that's
And
what I
that,
think is happening now.
well, what I'm trying to say, let me finish here. So that the epicenter stocks that have been beaten up, even if they just go back to their 200-day average, would be enough to get the index to a high because the NASDAQ's already at the high. And so that 3,300 gap that we have on the S&P might get filled, not because tech will go nuts, but because the epicenter stocks will just rebound a little bit more. What do you think of that?
Well, there's a huge difference in market capitalizations between the two groups. I mean, the top five FANGs are about 25% of the market now.
Right.
The catch-up stocks are like 5% of the market, or 10 at best. So buying there isn't going to be able to make up the impact that the five FANGs have. Also, the five FANGs have enormous weightings in the index. I think Apple is about 6% of the Dow average now. So the impact on the index is enormous, and gives us a more positive view of the market than is actually happening in the underlying stocks and in the real economy. So you have to be careful when the market gets this out of balance. And of the catch-up stocks, quite a few of them will go bankrupt by the end of the year. There's no guarantee that any of the publicly listed airlines will still be public companies in a year. And I don't see how the cruise lines survive this. They're not even American companies, so they won't qualify for any of these big bailout packages. They're all listed in Panama or Bermuda. All their employees are foreigners, South Korean, Russian, and so on, and or Filipino, and only their marketing departments here, which is maybe 1% of their total staff, actually work in the U.S. So not only are the cruise lines in trouble, I don't see any bailout of them. And let me ask you, when are you going to take your next cruise?
I've never been on a cruise.
Well, I used to take
so that would be my maiden voyage. That would be my maiden voyage.
It might also be your last voyage.
Right. No, I'm not so big on crowds, and it seemed like a lot of people stuck together on a cruise. Huh?
Well, and now the answer to that is you buy the owner's suite, which you just stay in your room the whole time. That's what I do. But
I also don't like to be told you can leave the boat and have to be back in 1.5 hours, and if you're not back, you're in big trouble. You know what I mean?
Well, there's no stops on the transatlantic cruise. That's why I always used to do that.
That one.
Yeah. But now they're all getting sued for letting passengers on when they knew they already had Corona carriers on board.
Yeah.
So
believe me, there's going to be more than a couple of lawsuits over this Corona, don't you think?
And there's maybe a dozen industries that are not coming back at all.
Right.
Or they're coming back via a Chapter 11, which wipes out all existing shareholders.
Right.
The bondholders will end up owning the company.
I think what people are saying is if we go up slightly on the tech and the other ones go up 20%, your McDonald's, your Home Depots, your Ross Dress for Less, your TJ Maxx, your, that type of thing.
Those companies will come back, but they can't carry the whole market. Yeah. Once you get Neil's opinion, I don't want to make this the John Thomas show.
Oh, no, I didn't know Neil had... Neil, you've come back?
No, I think he's having some kind of tech issue.
Oh, he's gone for good. Okay.
Yeah. That's why. Hey, listen. That's why you've had the microphone, John. You're the solo artist at the concert today. You know what I mean?
All of a sudden, the stage is all mine. Great.
You're our Frank Sinatra.
Right. I'm not sure I'd want to be Frank Sinatra.
So anyway, basically, we've covered quite a bit of stuff here today, and I'm just wondering if there's anything else that you think is worthwhile. Obviously, your general view is that we're a little bit overdone here on the upside, and that a pullback is certainly not off the table.
Oh, yeah. I think best case, we go in a sideways range trading market for 3 to 6 months until we get more information on a second wave. If we get a second wave, we could go to new lows. So how much do you want to buy on top of 50 and 100% moves?
Right. Yeah, I got a couple of other things I thought that would be good to throw out there. The gaming stocks. You've got DraftKings, you've got Churchill Downs, and you've got Penn Gaming. If we
Well,
look
and
at
also
those,
you've got all the casinos too.
forget about the casinos. These are about offline betting, and since people are going to be able to bet in like 24 states pretty soon,
Well,
some
to have online gaming, you have to have something to bet on.
well, they're going to be playing it.
And with all the sports closing, unless you want to
Yeah.
bet on South Korean baseball,
That's right now, though,
or
right?
girls volleyball, which is what they're actually betting on these days.
Right.
I mean,
Right.
people will bet on two flies crawling up a wall. So
Right.
you need actual sports
Right.
to get the gaming business back in line. So that becomes a play on reopening the NFL, reopening the NBA, and that will happen.
Yeah,
So,
let's look at CHDN so you know what I'm talking about. CHDN is Churchill Downs.
Mhm.
And you'll see that a couple of people are putting money in there.
Well, that's happening because they started having horse races without fans, with nobody in the stands.
And they have other
And they
gaming
actually
interests as well.
make
Yeah.
more money on the online business than they do on the in-person fans. So
Right.
that's totally understandable. And they were one of the first to do this, by the way, is to have a race with no fans.
How about a DKNG, DraftKings? It's been a real moneymaker.
Yeah, this hasn't really been my sector.
Yeah.
And I certainly don't want to get involved now.
Yeah, but it wasn't a bad thing to be in, huh?
No, but it was a high-risk bet.
Oh, yeah.
At the bottom. You needed humans to show up for this to make money. And, and like so many successful businesses now, they literally invented themselves as an online company in 3 weeks.
Right.
And that's what Target did. Target organized curbside pickups, and their sales increased by 50%. Put TGT up there. The people who can move fast and reinvent themselves, those are the people who are succeeding now. And the people are waiting for old models to come back. They're never going to come back. I'm afraid United Airlines and American are two of those.
Right.
Yeah, put UAL up there. Yeah, see, there's no recovery here at all, despite what's happening in the market. But we had a near double off the bottom, okay, from 20 up to 35. That kind of falls into the category of airline sales were up 123% last month. Well, it is true, but statistics lie. It went up, 123% from 8% of their traditional traffic. And the stock has essentially done the same thing. So
I guess what some people are saying is that people, if they start moving towards flying again, and the thing jumps from 30 to 50 to fill these gaps, and other companies in similar setups do that, it would be enough to get the S&P back to a high, because we're not that far from it anyway.
Not going to happen.
10%.
If these things don't go bankrupt, they'll shrink to half of their previous size. And they're already planning on doing that because their government bailout, their $50 billion runs out in September.
Right.
Unless they get another $50 billion, they're going to have to lay off about 500,000 people. The whole industry employs about 1 million people.
And how about, since obviously there's a lot of tension in China-U.S. relations right now, they just said they're not going to buy the soybeans or something like that. If we put up things like Baba or JD or Tencent, is there values on a pullback? Would you buy these pullbacks, or what are you thinking here?
I would buy a revisit to the lows. Do I really want to buy it right here? Let's ask the bigger question. Is Trump going to get nicer to China in the next 6 months, or is he going to get tougher on China? What's your bet?
Well, I think probably tougher, but you never know, because the guy does go with the wind. You know what I mean? He might modify, or it might be talk of one thing and then behind the scenes more conciliatory.
Yeah, I think he gets tougher on China. Since he's down in the polls by 10%. I mean, that's where he is.
Yeah.
It needs to distract people from the epidemic to have any chance of reelection.
Well, they got a huge army now. I hope he doesn't distract them too much. Huh?
Yeah, well, but they have a huge army, but no boats.
Right.
They have missiles. They have 200 nuclear weapons. So
Right.
I always ask the question, how far do you want to push a country that has 200 nuclear weapons?
Right.
The answer is not much.
Right. And
But it'll dominate the headlines for sure. I mean, he'll keep signing one-off executive orders, which are unenforceable, to get a headline, and that essentially has been the pattern all along on the whole China thing.
right. Now the dollar rolled over pretty good last week. Let's put up EEM, which is emerging markets. Is that going
better
to be
than
helpful?
that, put up UUP.
UUP. Okay.
Yeah, that is a dollar basket. And if you think the bond market is going to collapse and QE is going to destroy the value of the dollar, you want to be short the UUP, which is a basket of foreign currencies.
Right.
And if you really want to get specific, put up the FXE, which is the Euro ETF. And you can see all of these currencies are breaking out to the upside.
Absolutely.
Against the dollar. And that is the beginning of a multi-year trend, which we are just on the ground floor of right now.
So let's look at EEM and see if there's anything in emerging markets that might be worthwhile, or even INDA. Is that India?
Well, PIN is another India. The trouble is the emerging market economies are kind of like the canary in the coal mine for the global economy. When things are great, they go through the roof. When things are horrible, they just get destroyed. So it really is a call on the global recovery economy, and that will eventually happen someday. The question is, do we get one more dip? Do we get one more dip before a final recovery? And again, this becomes another second wave issue.
In other words,
someone in the live chat is asking about DB, Deutsche Bank.
What is it?
DB.
And what is that?
Oh, Deutsche Bank.
Deutsche Bank.
Deutsche Bank, DB. Obviously, it's had a big turn here.
Yeah,
and,
Deutsche Bank is a company which essentially has a negative net worth if you applied American accounting standards to it. So people have been trying to get me to buy this for years, and it's another long nap stock. I'd rather go take a long nap first.
Yeah, they still have the negative interest rates to deal with, and sluggish economies, et cetera.
Well, and no change for the foreseeable future. So
it looks like it just has some gaps that it's going to go up and fill, at least, maybe something.
Yeah,
like that.
if I get the choice of buying a Deutsche Bank and JP Morgan, I'll take JP Morgan all day long.
Yeah.
With a second helping at Bank of America.
But a speculative play here down at the 6 and 7 mark certainly is paying off. So if the guy's talking about how does it look now, it definitely looks like it still has momentum, and it definitely has some gaps above that it might try to fill. But it's certainly not quite the deal it was at 650. Huh?
Yeah, if that's your game, I'd go find another profession.
Yeah,
very high risk, low return type of opportunity. There are too many other great things out there you can buy rather than buy Deutsche Bank and then pray.
All right, well, I don't want to get in trouble here. There was a question I was supposed to ask, and before we run out of time, I'm asking it right now. So here's the question, John. What indicators influence your trading the most?
Well, if you're looking at technicals, you have to watch that 50-day versus 200-day moving averages, every day. And that has a big influence on short-term directions in the stock. As far as the economy goes, you have to watch the weekly jobless claims every week. That's the one. If you only look at one economic indicator, that has to be the one.
And so that would be the one to keep an eye on, the 50 and the 200 day, and then they're interchanging with each other and stuff like that, huh?
Yeah, hold on a sec. I'll be with you in a second. I'm just finishing up a webinar. Go. So
Yeah, I think, John, we've covered quite a bit here today, and I think there's enough meat on the
I
sandwich.
think you got your dollar's worth on this one.
Yeah, exactly. But I did want to say this. There's obviously a lot more behind the curtain. And for people who want to hear your opinions, your views, and your perspective, again, you have something coming up on Thursday. Why don't you re-invite everybody and let them know how they can get a hold of you?
Yeah, go to madhedge.com and you can register for free. We're giving away $100,000 in free prizes to anyone who just shows up. And there you get an opportunity here, not from me, but from 9 of the smartest people I consider in the marketplace. They all have different views. They all have different strategies. You'll have the chance to pick which one works for you. So go to madhedge.com for the Mad Hedge Traders and Investors Summit, and I will be the host with the most.
All right. All right, sounds great. Everybody should take advantage of that to get the information. And again, I'm Jim with the Option Professor, and every week I give a market update plus my views and my opinions on things and some specific things that I'm keeping an eye on. So you can get in the queue by just emailing us, optionprofessor@gmail.com. Let us know you'd like to receive the free information, and we'll put you in there. Right now, I'm going to turn it back over to David. John, thanks a lot for being here. It's always fun. And David, you take it from here. Yep, you bet.
All right, thanks everyone. Just a quick reminder, everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory. I tried to post the link to John's event in the live chat. That wasn't working, but like I said, it was it johnmadhedge.com, right? So yeah, that's the link for Thursday. And also, just a reminder, be sure to join us tomorrow for another episode of Analyze Your Trade. That'll be at 4 p.m. Eastern Time. Tim Reset will be on for the first time. And that's it. Thanks, everyone.